Good morning, bonjour, and ni hao. I would like to welcome everyone who are joined. This is Mohammed Abu Shanab. I'm the tax expert and international lawyer, a partner of Tax Hackers. We have a very interesting topic we would like to cover today, and I would like to welcome everyone and take it step by step. This will be like it will be mainly one way webinar where I will present a presentation. I have a very interesting presentation today. I will talk about tax hackers. I'll talk about myself, my experience, and a couple of ideas around the US LLC and how to avoid taxes legally with the step-by-step information. So we are on the time right now. So let's start our presentation. If you have any questions after the presentation or the webinar, you can leave it in the chat or the Q&A, and I will follow them step by step on the way. Let's start now. Okay. So, I mean, the topic today is a very simple. It's the title is "How do the wealthy legally avoid paying taxes?" When we were looking for different ways to title the webinar, when we mention the word wealthy, it doesn't have to be a couple of millions. It could be just starting from 50K. If you making 50K anywhere in the world, I consider you as a wealthy individual, because could be peanuts in the US, Canada, Australia, the UK, many Europe, but this could be put you in a very, you can say, well-off plan in other countries like Thailand, Malaysia, and many other, you can say, emerging and frontier markets where the 50K could be a huge wealth. So you could consider yourself below the average in high income countries, but you could be very well off in other jurisdictions or other countries. Before we start, normally we have a legal disclaimer. This is a content provider. It's just for informational purposes only. Every case is different. Whatever you have to look to your background, your citizenship, your residency, if you have access to multiply passport, if you have wealth or bank accounts or tax residence in different countries. So it's case by case basis. We're trying to minimize and provide, as you can say, general information as possible, but normally this is just for educational purposes only. If you would like to have a consultation, you can book me or just make sure that this is just a general information. Let's go. Okay. So my name is Mohammed Abu Shanab. For short, you can always call me Mo. This is my nickname. I have different, you can say, nickname, but normally it's Mo. I'm an international lawyer. I'm a global tax expert, and I've been doing this job for almost 20 years myself. I have a couple of passports. I was born in Egypt. I've lived in London, Dubai, Miami, and Istanbul, and many other places, including I've done business in most of the, you can say, the offshore jurisdictions, including Cayman Island, Panama, Dubai for sure, Malta, Cyprus, Mauritius, Hong Kong, and many other places. I was the first client for myself. I've gone through transformation journey. I was doing a lot of businesses between different countries, and one day I say why I should pay taxes to the country I've lived in. So I've decided this was early 20s, so the internet age was very fragile at this time, and I've go through a self-learning journey until I've built my assets. I've done businesses. I've implementing businesses more 20 plus countries. I'm also the CEO founder of a company called Global Expat, and I've been partnered with Tax Hackers for almost now 2 years. I've met the founders teams, and we are doing amazing job together to help individuals, entrepreneurs, digital nomads, whatever you call yourself. If you prefer to call yourself a digital nomad, we can help you. If you prefer to call yourself just exploring or working remotely or just thinking beyond your border, the idea that the world is huge and there's a lot of opportunities we can approach. I'm here to help you with the team of Tax Hackers. Okay, so this is there will be like a live question and answer format. I mean, there's a lot of questions, a couple of questions, not a lot of them have been already submitted. We will answer them step by step, but if you have more questions right now, if you can leave them in the chat or the Q&A section, and we will try to answer it. As I mentioned, this will not be a general answer. It will not be specific to your case, because in order to determine any case-by-case cases, we have to answer at least 10 to 15 questions so we can make a specific case about yourself. Okay, so the idea is very simple. That, I mean, you've seen a lot of digital nomads traveling between beach areas. They enjoy this exotic locations, and they keep thinking about, do they actually pay less taxes or no taxes at all? The idea that most of anyone who have a wealth more than, you can say, $500,000 or $1 million, they have enough resources, they have access to lawyers, they have access to advisors, whatever those family or business, and they spend portion of this wealth to avoid paying taxes. It's not avoid paying taxes that they try to hide the money or they try to go into something shady. No, it's all the rules and regulations in different countries have a certain criteria that once you understand this certain criteria, you will be able to fulfill yourself. It's depending on some countries, for example, the US, which is outside of the scope. We are not advising US citizens, especially if they would like to set up with US LLC with tax hackers, but anyone else will be able to use the same way we will instruct in the presentation, and we will go into more details step by step. Okay, so there was, I mean, the idea about global tax strategies, and especially the US LLC, is not a new thing. I mean, you will find this information going back almost more than 100 years. Anyone, and I say this is generally, forget about the US citizens, we put them in category. If you are a US citizen or a green card holder, or have a residency in the US through a visa or through different ways, what we're talking about this webinar will not fit into you, because they have different rules and regulations. But anyone else, including Canadians, Mexicans, British, whatever, if you are dual citizen between US and another citizenship like the UK, Australia, or any other European country, this could be work for you, but it will be a little complicated. So let's focus in anyone who are not American citizen and he doesn't live in the US. That will be for. You can set up a US LLC. Normally there is 50 plus states, you can choose them, and then you can use this setup to manage your business remotely. If you are doing a business from a remote, I mean, it doesn't have to be on the ground. We will go through various setup and various ideas. You will be able to use this way and do it to the next step. The idea, the partnership between Global Expat, we at the Global Expat, we're not just focusing in the US, we focus on a more global perspective. And the idea between the partnership between us and tax hackers is that if you have, for example, if you are a British citizen who have lived all their life in the UK and they would like to use US LLC, that's straightforward. But if you are a British citizen who have assets in more than one country, or have a complicated status in the UK, or would like to see how can I exit the UK tax system efficiently, you will need something more than the standard package. You will need an afterthought advice. You will need to check which assets or which information or which tax strategy that you need to go so you can exit the UK properly. Tax hackers will help you set up in the US, as mentioned, for everyone, but getting out the UK system or the Canadian system, Australian system, whatever the country that you are resident, it needs to be done on a careful basis, on you can say one-to-one. As we've seen in the news, governments are very eager to tax everyone. even if you tell them I'm not living there anymore. The idea that, because I've seen a lot of horror stories, especially from my Canadian friends and Irish and British, the high tax jurisdictions, including Australia, New Zealand, Germany for sure, and most of the European states, that let's take John. John decided to travel from Ireland. He's have an Irish passport and say, I will go traveling the world for the next couple of years. Now I don't want to, I don't need to pay any taxes, because I understand that when I exit Ireland, I just leave through the airport, the Dublin airport, the lovely airport. Now I'm not, I'm not a tax resident anymore. Actually, it's the other way around. I mean, the tax authorities normally in 99% will consider you a resident unless you tell them otherwise. There's different levels of variations. We can go through it and explain that how tax authority is trying to tax you as much as possible. And the idea they try to put, especially because digital nomadism or working remotely, it's still something new. It was very, to the, you can say, to the geeks and nerds before the pandemic. Now there is millions and millions of individuals who enjoy traveling in different countries and doesn't have a base or doesn't have a tax residency in a country. So they're trying to look into that kind of growing segment and make sure that they will tax them. So authorities are looking for different, you can say, outside the box ways to tax you as much as possible. And you have to be very careful what you do, what you represent with them, and what is your short-term plan and long-term plan. But in the same time, there's a good way. High net worth individuals use legal structure to reduce exposure. Legal structure, for example, there is a lot of, you can say, company formations, trust structures, and even more complicated offshore trusts, depending on how much wealth you would like to protect in the short term and long term. Legally, you will be able to reduce or eliminate the tax exposures to the tax authorities in your wealth, whatever it could be. Property, it could be for inheritance, it could be for running a business, or you would like to sell a business or moving assets between countries. I mean, if you just Google the offshore world or how to pay taxes legally and check about the news that have been going through the last 10 years, most of them are very bad information about something called Panama Papers or HSBC scandals. And the idea that anyone have structured wealth, they try use tax loopholes and they try to avoid taxes. By the way, there is a difference between mindset about paying less taxes or paying no taxes at all. As long as it's legal, you can do it. It doesn't matter if you have 50K, if you have 500, or if you have 5 million. As long as the rules and regulations in different countries allow this, you'll be able to do it. And by the way, countries themselves, because many individuals, especially in the digital nomadism, they don't understand that actually countries who tax you as much as possible use offshore jurisdiction and use offshore islands like Cayman Island or Singapore. Because if for example Canada would like to do business from the UK, and instead they do business together, they do it through a neutral place. Mostly neutral places like Cayman Island, you don't have taxes. So countries themselves use such legal allowed loopholes so they can save taxes. The wealthy know this information, and now with the internet boom and everyone would like to pay as less taxes as possible, this information is available online. The only thing I would like to say here with the red alert, unfortunately, there is a lot of cowboys available online, and they try to provide, you can say, incorrect information. They try to use information which is actually not true and try to say, if you get my setup, if you get advice from me, I will be able to help you. You have to differentiate between people who have a legal background, people who have a tax background, and others, individuals who have nothing. They have just fancy Instagram accounts and a lot of famous YouTube channels, but actually they don't have the legal understanding of individuals and how to help them pay legally less taxes, because it's not magic. It's not science rocket. It's a very structured way, and it's always case by case. So you have to be careful where you get your advice and how to build, because once you have a structure in place, that could be the difference between you get a penalty or you pay as less as possible taxes. And one last thing, this slide, we would like to understand there's difference between tax residency, where you pay taxes, and where you actually reside. You will see a lot of fancy ads say, come to Dubai, set up a company here, and you will be legally pay zero taxes. This is 50% right, 50% wrong. It have to be case by cases, and you not just be reside in Dubai and to be tax free. No, it's never happened this way. I know this is a lot of information available online, especially in Dubai and other places, that you can set up yourself in a country and you will be legally reduced your taxes. No, it have to be two ways. It have to be your own country or your own place of tax residency and where you're going. And you need in between your country and where you're going, you need an exit strategy. Exit strategy is a very important thing. And when you talk about exit strategy, it could be the difference between, I would like to leave, for example, in our example, Mr. John, who is an Irish, our John would like to go back to Ireland, or he will keep traveling, or he will set up somewhere else for the next 10 to 15 years. That's the difference. I just would like to keep traveling a couple of years and then I come back, or I don't want to see Ireland anymore. Okay, that's the decision. So you need to understand it's short-term or long-term, it's permanent or semi-permanent, or that will be forever. So that's the difference between success and failure. Here we'll go through into a couple of numbers, and that's the correct information. When we try to make, there is a lot of, you can say back and forth, but we'll try to make it very simple in this webinar so we can have some numbers. And once you have the numbers up and running, you will be able to understand it. So understanding tax residency, that's different from your own residency, where you live. If you have digital nomad visa, for example, in Portugal, or in Thailand, or in Croatia, whatever the country you are. Tax residency is not the same as citizenship. Tax residency is not the same as normal residency, or I call them legal residency. And one of the mistakes all those people get into it when they're starting this, they think, I will buy a second passport, or invest in a second passport, especially from the Caribbean or the other ones who are coming up, like Vanuatu or Noro Islands. There is many islands going there, and they try to offer their passports starting from 100K up to a couple of hundreds. If I buy or invest in this second citizenship, I will pay zero taxes. That's the same mistake. Getting a second passport or investing in a second passport, whatever it's through, whatever the way you will get it, will not make you tax-free, even if the country that you're getting your second citizenship is tax-free. Okay, so you have to differentiate with this. The general rule we have is 183 days rule. It's not just, it's the general rule. It's, you can say it, I call it, just because 183 days is a little bit hard number to remember, I call them 6 months plus day, just to figure yourself. So if you spend, and this is one of the rules, if you spend 6 months plus a day in a country, you will be considered a tax residency in this country. Okay, some tax authority can send you letters, and this has happened to many individuals, especially, for example, in Spain. I have a lot of clients who are Spain, and they just living there under the radar, and the tax authorities know about this, and they start sending them letters. They don't register themselves in Spain. They didn't sign up for a tax number. They didn't declare. Most of them are European citizens, so they can live in Spain as much as, but they didn't declare themselves as a residency in Spain. And the tax authorities know, and they send them letters. If you can Google tax residency in Spain, you will find this. So you can be obliged to pay taxes in a country if you spend more than 183 days or the six months plus 1 day, even if you are not registered in this country. Some tax authorities are very strict, like the British one, the Irish one, the Canadian one, the high tax countries, Spain, the Spanish one also. And some countries and tax authorities, they don't care. Okay, they don't care if you spend a couple of years. But once you have illegal to register, for example, if you would like to get, if you would like to do anything in the country, especially for opening something very simple. If you would, nowadays, Thailand, let's talk an example about Thailand. They're starting changing their tax system. They will limit the number of amount of money you will be able to do it at cash. Everything have to be transacted to the bank. If you tell them, if you've been living for Thailand for 10 years outside the radar, and then you try to do anything, buy a property or go buy a company, whatever thing that related to the country, and then that will trigger back tax for all the years that you informed them about it. Even if you didn't register, it will be taxed, will be going back. Because tax is the source of income for any country, and they would like to make it as much as bigger as possible. And then you try to fight with them. And you will be under stress, you have to collect documents, and it's not, it's a very stressful time. I've had a lot of clients who have gone through something similar in different countries, and I don't want to see anyone in this position. So it's much better to be ready when things change. So getting back to the example about the tax residency, the United Arab Emirates, their income tax is 0%, but they have a corporate tax which is starting from 9%. That's a new update. Also, some countries, for example, Portugal, they have the non-NHR regime, which is allow you to pay certain flat rate tax for 10 years. Okay, and they keep changing now, starting from the government now in 2025. They would like to get rid as much of digital nomads, so they keep changing the taxes regime. Malta have another program, Cyprus have another one, but there is different ways. If you are a European citizen, you'll not be able to get it. For example, the lower tax status. You have to be outside the EU in order to get such preferable status, and also the Caribbean citizenship by investment. As we explained before, getting a second citizenship by investment from the Caribbean, that will not mean that you will pay zero taxes. You have to exit your tax status in your country properly with the exit strategy, and then you declare yourself, you get the passport, and then you will need to have a place to call home. This is my abode, this is my tax residence. You can get the passport, for example, in the Caribbean. Let's take example St. Kitts and Nevis, and you register yourself there. Getting the passport alone will not be enough, but you need to declare yourself as a resident there, even there's no income tax there. But you need to have an address there. You need to have a proper communication, someone represent you on the ground if you are not living there, and use your passport as a way. So that was general idea. Let's go through into more ideas about the structure, how mostly the wealthy are using that global structure. One of the easiest way, which is you'll find a lot of information about it, is the offshore companies, especially in low or no tax jurisdiction. I can give you a couple of examples. The most famous one is Cayman Island and Panama. The legal system in these two jurisdictions, let's start with Cayman Island because it's based in the British English system. It's allow individuals outside the country to have a company. You can own the company upright or with other partners. There is now they have a, you can say, certain threshold. It used to be very easy 20 years ago, 30 years ago, but now it's getting more complicated. To open the company, you need to have a local agent. You need to have a lawyer or registered agent that will help you run the company. And the cost of just registering the company is enormous. And it will just give you the company. So it used to be an easy and cheap. Now it's getting more complicated because there is a lot of, you can say, eyes going into such low tax jurisdiction, especially Panama, Cayman Island, Hong Kong, Mauritius, for example. Hong Kong have a lot of problems about sanctions, and they allow certain nationalities are welcome, other nationalities are not welcome. Mainly, you have to look at it with different perspective and what you need the offshore company. And then there's the other more where is that's much more complicated, the trust, foundations, and also holding companies. The trust is used as a way to keep the assets outside yourself, outside the jurisdiction that you live, and put it in another country that will be registered. The most famous place for forming trust is a Caribbean country called, I think, Cook Island. This country have a special way that you can set up your trust and put the assets inside the trust, and that will be protected from any tax or liability or anyone coming after your wealth or whatever in different places. Foundation is a different way. Mostly, you can say the crypto holders or blockchain projects, now they set up a foundation. Foundations, if you look to the terminology for the word of foundation, it's look like like NGO or non-charitable organization, but actually you set up the foundation in not for profit, but and instead of the shareholders pay you, invest in the business, you receive a kind of donations into the foundation. So it's a legal way of settling a business that will not be for profit, but it could be used in family offices or people who have if you have a business with multiply set up in different countries and you would like to protect everyone in a legal way, that could be the foundations. Holding companies, it used to be a very specific way to have like you can say an umbrella company. You can set up a holding company, for example, in the United Arab Emirates, and then you have different subsidiaries for this business to operate in different countries. Most of the digital nomads and people who will not be able to get benefits of, but at the end of the day, if you're doing businesses in more countries or more, I call them ecosystem. If you're doing business from the US to the EU to the Middle East and Africa and Asia, you can use a holding company. Could just be a parent company and subsidiary. Just that would be considered holding company. And there is a lot of tax benefits. There is a lot of, you can say, minimizing risk. Because, for example, if you're having a holding company in the United Arab Emirates, which is, for example, Dubai, and then you have, that will be the holding company where all the legal assets of the business, but you have an operating business, operating subsidiary. This operating subsidiary could operate, for example, in high-risk country like in Nigeria, like in Egypt, like in African country, or even in Asian country. If the authorities in such country try to, or any problem happen in this country, your assets will be allocated on the holding company. The operating company will be only to manage the business on the ground, and the holding company will be the one to keep all the wealth. All the profits will go back to the holding company. Also, we've discussed this, but citizenship by investment or residency planning. I mean, getting a citizenship, it doesn't have to be it could be by investment. It could be by family ties. If you have grandfather or grandmother from another country, this could be a way to get it. Could be through marriage. Could be through by entrepreneur routes. You can open a business in a country, you stay there for a couple of years, and then you get through the citizenship of this country. And there is other like an exemptions or by donations, but it's a very limited way to get a citizenship. So it doesn't have to be by investment. There's other ways, and always have a plan. The fastest and the most easy way to get a citizenship is by investment. For example, the Caribbean, you give them 200K, you pay it like you start the process, you get pre-approval, and then you pay the certain fees, and then you do a donation directly to the country. For example, St. Kitts and Nevis, they take the donation, and after they receive the money, they issue a certificate of citizenship, and then they issue a passport. So a citizen. That's the fastest route. There's other options available now. Many countries are trying to compete, like Turkey, Egypt, and on other places will be able to actually be a citizen in the country, because the Caribbean islands are a little bit small. They don't have the facility of infrastructure. It's very hard to live there. I've been there a couple of times. It's very expensive, but there's also other countries that you can acquire, like real countries like in Egypt and Turkey, for example, where you actually can acquire the citizenship and you will be citizen of the country. Even because I've received a lot of these questions, I've heard them over and over again. A very simple question. John would like to move to Turkey. He would like to be Turkish citizenship. He doesn't speak Turkish. He doesn't know anything. He doesn't have any family ties to Turkey. Do the government will allow him to be Turkish citizen? Yes. The government rule, or you can say the rule for such citizenship by investment, doesn't relate to your ethnicity, your background, your beliefs, your family roots. Pay the money, follow the rules, get the citizenship. It could be, it doesn't have to be just donation. It could be donation, it could be property, it could be mixed between both, or it could be bank deposits. You can pay a certain amount of money. For example, in Turkey, it's 400k USD. You keep the money for a couple of years. They get you the citizenship first, but you'll not be able to take the money after. You have to keep the money for 3 years. It will be interest free. You could buy property in the same 400k also. In Egypt, it's 250. In the Caribbean islands, mostly 200 plus K, but there's also the other options starting now from 100K. The residency, there's also something you can say residency by investment. It's similar to the citizenship, but it doesn't lead to have a passport. You will not be considered yourself a citizen in the country, but you'll consider be a long-term resident. Mostly there is a golden visas. If you're not, this is mainly for non-European. If you have a European passport, you'll not be able to apply. You can get a golden visa. It's very limited now. It's only in Greece and Hungary and very, very certain Latvia also. The one in Spain and Portugal, the one in Spain almost stopped. In Portugal, they are trying to limit as much as possible. Even the numbers is not great. But there's something called European golden visa. There is also another one, European, it's not European, there is United Arab Emirates have something called golden visa. It doesn't lead to permanent residency, but it gives you, and instead of the standard 2 years in the United Arab Emirates, they give you a 10 years access. So it's a kind of, you can say it's similar to the green card or the Trump card. It's 10 years residency. That's a long time. You can do whatever you can start a business, you can bring your family. It's not cheap. It's starting for 2 million dirhams, but it will be another way to prove that you are not actually living in your country, and you can use it for many other ways. So going back to the standard, you can say this is almost everyone. Anyone can do it as long as they are not American citizen, they don't have a green card, or they don't have a visa access, long-term visa access. If you're going back and forth to the US traveling with ESTA, or you have a B1, B2, you can use the US LLC. But if you have green card, if you have O1 visa, or have E2 visa, any sort of long-term, it doesn't have to be immigrant or non-immigrant. There's no difference. But if you have a residence access to the US, not a visa access, the difference between resident means that you can live in the US. This solution will not fit into you. But if you have short-term, like 60 days, 90 days, like normal visas, like the ESTAs and B1, B2s, you'll be able to use the US LLC. So why the US LLC is the most powerful way that you can legally reduce your tax without spending hundreds and hundreds of dollars. First of all, if you're just starting this world, I mean, getting the idea or changing your mindset that can actually do business in another country without being there, it's not easy. It takes, I know people who do it, take them 6 months. I know people who take them a couple of years until they get into the mindset that you can do this. But the US is the biggest offshore country in the world from the as long as you are non-American or green card holder. That's one thing. It's 100% legal. There is most of the states in the US, they keep fighting together, not fighting at the war, but they keep trying to propose new ways so they can attract global entrepreneurs, they can do business. Once you open a US LLC, for example, in Delaware, Wyoming, in Tax Hackers Way, as a partner, we prefer to have in New Mexico. There is many advantage for New Mexico if you compare it with Wyoming or Delaware or Florida, for example, or Texas. There's like, that's the easiest and most stable way. If you Google Open US LLC, you will find the first number that you will see Wyoming and many Delaware for startups. Wyoming is very good for privacy, but it's not good for operation. Delaware is excellent for startup. If you are running a startup that you will invest, that people, others, especially US investors or people will put money in you, it have to be Delaware. But for the US setup we have with Tax Hackers, it's New Mexico. New Mexico is not a very well famous state, but have a very well stable rules, especially for non-residents. It's called something path-through taxation benefits. That once you have the LLC, it's approved by the state. You have a confirmation that the company have been registered to the US, have been registered. You will pay zero taxes actually legally, if no US trade or clients. So how can I do this? As long as you are not American citizen or green card holder, you will be able to do this. The Tax Hacker setup, they've been doing this for almost 2 years now, and they have hundreds and hundreds of clients will be able to do through the setup, and it's called pass-through taxation. That means if you let's go to John. John used to be an Irish resident. Now he's living in let's say Paraguay or Thailand, or where he will pay less taxes or no taxes at all. The profits that come from the company will not be taxed on the US because John is not a US resident, and it will be gone through to his residency in the other country, which could be also zero tax. That's why he will be able to benefit from paying almost a 0% tax. The difference between setup a Cayman Island or US LLC is the cost, the complexity. Once you open your company in the US is approved, you'll be able to use not just made in USA. You'll be able to use the whole US ecosystem. You will be instantly connect with payment processing like Stripe and any other like Shopify. You will get access to the best banking system in the world. That's until date at the US. You will be able to do business, whatever, as a consultant or the online or trader, whatever business that you will do as a US American company, even if you never touch the American soil. That's the benefit of running a US LLC compared to other places, compared to other, you can say, other setup, like a more complex one, like in Dubai or Cayman Island or Singapore or Hong Kong, or I mean, most of we can say it offshore jurisdiction that you see online. It's simple, it's easy, it's legally 100%. It's been done over and over again. And I would say this again, US taxes or US states, they are trying to offer new incentives to attract global entrepreneurs, because once you set up there, that's a benefit of the state, because you have to pay fees each year. So it's a minimum fee, a minimum number of fees that you have to pay. But this could be like a direct foreign investment in the business itself. So let's take an example here. We have John, that's our Irish friend. We call him, he's nomad entrepreneur. He starting with the US, so he forms US company LLC in New Mexico state. He have the company registered, he have the company approved. He got something called EIN number. Its EIN number is the tax number that related to the company. That's not a personal tax number. It's not like the social security number or the national insurance number or the tax number in Canada or CTA or Australia. That's totally different. That's not personal. That link it to his company. And when you sign up, for example, for Stripe, they ask you about your tax number. If you choose corporation or a company, you say this is US LLC, and you put the EIN number. So the EIN number is linked to the company, not yourself. Profits earned outside the US, he's starting invoicing client because he maybe have clients in Asia and the Middle East or Europe, whatever the clients are, Canada, whatever. There's no regional jurisdictions or limitations, could be anywhere. And he invoicing the clients from the setup he have in the US. He's sending them the invoices. They could be paid through the bank transfer or online payment process. So he received the money into the US LLC company bank account, no US taxes involved. You'll be able to access banking. You can set up also PayPal. There's one thing you can add on top. I'll be frankly with you, just to make this is more advantage to everyone who's watching this, and also after the webinar. The only drawback on running the US LLC, it doesn't come with a tax residency. That's the only thing. So if you don't prefer to keep traveling, or you say, I would like to have a tax residency officially with the documents, with everything in a low or zero tax country, you have to choose somewhere else. You have to mix between. So running the business from Dubai is a little bit complicated. It's not as easy as the US LLC, but the US LLC doesn't give you tax residency. It gives you the company, it gives you the operating system to operate the business as lowest tax as possible. But if you would like to have a personal tax residency, there's many options. One of them is Dubai. And you can set up yourself as a tax residency there. You get, if you would like to leave, you can leave there, or you can download leave. If you leave there more than 90 days per year, you will get a tax certificate to say that you're actually living there, and you can use this certificate with your country. You can have a personal bank accounts on the UAE or Dubai in general. And this could be for other countries. That's depending on the levels. Could be even Cayman Island, could be if you would like to get a passport from the Caribbean, or if you prefer, it could be Paraguay. Also, Paraguay is a very good option. If you prefer to stay in Latin America, or you would like to have access to the same time zone as the US and Canada, Paraguay, Panama also is another option. There is many options. There's the best solution. I mean, even if you set up your company and set up everything in one location in Dubai, it's not the best. It have to be case by case. It have to be certain about how much money you would like to invest, what kind of taxes you would like to save, and what is your short-term and long-term goals. So that's the simple setup. Everyone can do it. It's not that complicated. But we can discuss about advanced structures where we can go through. For example, that's one of the strategies. You can have multi-entity strategies. For example, we set up Global Expat as an incorporating company in Delaware. Okay, Delaware is mainly for startups because we have an outside investment or partners, but in the same time, we have an operating US LLC in different states. You don't have to go through this. This is much more, you can say level 2 or level 3 of dealing in the offshore world. By the way, you can still do this yourself. It doesn't have to be through lawyers or accountants. Once you have the base, you can start doing. But once you understand what the terminologies, you would like to spend hours and hours, go through research. I have a lot of my clients or partners who love to go through into details. They tell me, send me as much as details, and I would like to learn it. It's not just about the journey that I will pay someone to do everything myself, but the other way is that, okay, I can use some of the information available online, because there is many ready-made solutions that could be on the advanced structure, but you have to make sure that you get the benefits. Operating multiply LLC or operating multiply a holding company and incorporated company, that could be benefit as long as your business makes enough money to sustain them. Also, one of the things could be scaling with UAE, United Arab Emirates, which is Dubai, free zone. There is three companies, you can say, types in the United Arab Emirates or Dubai. There's something called free zone. Free zone is similar to the US LLC. It's zero taxes, but you're not able to do business inside the country. There is something called mainland. Mainland, it's inside the country. you have to pay 9% tax, and you need to live there at least a couple of months per year. And there's something called offshore. This is the different levels, because they have different levels. The offshore, it's very hard to, there's no residency come with the offshore. You don't leave to live there. You can open a bank account, but it only be business bank account. It's not a personal account. So you can, there's an offshore, and there is free zone, and there's a mainland. They have different naming strategies than other countries, because it's the legal system in the UAE is a mix between the British and the Middle East one. So it's a little bit unique. In the same time, also, you can, if you are not, if you have an EU passport, you can mix it between, for example, having residency in a low tax place. It could be Malta, could be Cyprus, could be Bulgaria. As an EU national, you can set up yourself there. That will be your residency, but you can combine it with the US LLC to manage all the business. So you can mix and match. Doesn't have to be. But one of the things people that tell me that we've explained before, I love Spain. I would like to make everything Spain. I will make the company Spain. I'll take my residency Spain. Spain is an amazing place to have a holiday, but it's a very bad place to run a business. It's a very bad place to pay taxes, because it's high taxes. It's look like the Caribbean, but actually it's high tax country. So you have to differentiate between what you like, what you want, and what actually would benefit you. That's a differentiate, because there is like a mindset change once you go into place and like the place. I would like to make all the eggs in one basket. That's a very bad structure, especially where you'll be able to do business in. Okay, so I think we have a chat here. We have almost 45 minutes left. So we just finished 45 minutes. Okay, so how we can help? The idea is very simple. It's like we have done this partnership with Tax Hacker for almost 2 years now. If you would like to talk, you can book a consultation with me directly through Tax Hackers. We have a special deal. If you go directly with Global Expat, it's more expensive. So if you're going through Tax Hacker, there will be special offer that will be sent after the webinar. We can go through residency, company setup, banking, compliance. If you would like to have a special exit strategy for getting out of your home country, that's another way. Also, we will have a special exclusive for students and clients. And one more thing, we are starting like a special course that will give you all the information you need, so you can do it yourself. And instead of going to the unstructured way of going sign up with shady programs, the course will be hours, and they will take you through everything. We're still working with it, but once it's launched, we will let you know. So start with the first question. Okay. Okay. This is, let me just buy through it. It's like buying a property in Spain at holiday rental, tax consistency, and residency. I would like to buy a property in Spain with a tourist license to rent out, but also to use at holiday home. What are the direct consequences for this? I have to register this as separate business in Spain and pay taxes. Okay, so that's if you would like to buy a property in Spain and run a business through Spain, that's the most biggest mistake you can do. It's much better that you set up a business outside Spain, okay? For example, in a low-tax country. It could be Malta, it could be Cyprus, could be the United Arab Emirates. I don't advise set up the US LLC for the rental income, because it could be trigger tax back to the your home country. So it's be low-tax country, okay? And you get the rental income from Spain into the country. Don't own the property in your name. It's much better that you own the property on a business, not your own name, because it could be trigger tax. If you would like to buy more than a property, that could be done in a proper way, and all the rental income would be run through an investment business, not just a way like a property management or a kind of property rental income. That's one of the things. Okay, we don't have enough time to answer a question, but generally could be Spain is a very strict one thing. If you buy the property in your name, or you open the bank account in Spain, you will be under the radar for the tax authorities in Spain, and you have to pay taxes to the Spanish government. Another thing, general investment platforms without residence. You have a consultation with consultant, interactive proposal solution, but IB requires an ITIN. ITIN number is different from an EI number. ITIN number is the special tax number that's linked to yourself as an individual. If you apply for the ITIN number, you can be benefit for opening personal bank accounts in the US, like PayPal, or a person like a Chase, or any account. You can use investment platforms, but you have to differentiate because of the US. Any trading platform has different reasons. Are you actually a resident in the US? Do you have like a green card or American passport? If you don't have any of this, you have to tell them, I'm not a resident there. You can use the ITIN number, but some platforms need a proof that you're actually living there, because they know the difference between virtual addresses, which has been rejected as you see in the story, and actual addresses there. So if you would like to access investment platform in the US, you have to make sure it's for the US market or the non-US market. Most of the platforms have access to global markets, especially for the EU, UK, Australia, and something only for the American citizen or US, because they have that kind of tax treaty with the IRS. So you have to be very careful about this, such information. Best practice for digital nomad, we're open clean citizen investing without permanent resident. The best advice for anyone who is digital nomad without a permanent resident, choose a place. Whatever you are doing, if you keep traveling between countries, that's fine. Enjoy the world. No, the world is your oyster. But you have to have an address, a telephone number, and a tax residency in a low tax country. If you're going back to the same question about the same issue about John. John is an Irish. He used to have all his bank accounts in Ireland. You have a tax residency in Ireland, okay? John, the best way, he decided to move his tax residency, for example, in Dubai or Paraguay. He set up himself there in each of the country or any other low tax country. And he say to the Ireland tax authorities, the revenue, it's called the revenue in Ireland. He sent a form. He stopped paying any taxes back to the Ireland, and he say they have a tax residency in another country. So, but he doesn't live in Paraguay or Dubai. He keep traveling, so you can enjoy the world, but have a permanent base. The US LLC will not be considered as a permanent residency. And when you say permanent residency, that's when you fill any form going to online, they ask you, are you resident in which country? They can ask you what kind of citizenship you have. You can say Ireland. Okay, that's fine. That will not be changed. Where your address, you will type Dubai or Paraguay or the low tax country that you choose. That's the difference between the best practice for digital nomad. Unfortunately, such information is not available for everyone, and many of the information available online is not as true. So, compliance and risk. What risk exists if I open an account without being able to provide proof of residency or tax residency? Could my account be frozen later if I start investing and later move to the country like Poland? Can I keep? That's a general question, but banking system, you have to differentiate between two things. Normal banks like HSBC, Chase, Barclays, Citibank, and fintech banks like Wise, Revlit, Monzo, whatever. Okay. And 26, the traditional banks have much more complicated compliance and risk. Before you open the account, they ask you for every possible document that you need, especially if you are not a resident in this country. If you are in the EU and you have an EU passport, your life will be easier. You can choose the bank account, but you have to make sure that this bank account will not put you into risk. The traditional banks ask for as much as documents before, after. Okay. The fintech banks, they open the bank account, okay? And most instantly, like Wise or others. And then they keep asking for questions. And you have seen the problem happen in Wise, where especially for a couple of US LLC or people operating in the US, they change the rules and regulation, and they start putting the account on hold because they need not a virtual address, they need an actual address which is registered to someone in the country. They have a list of all the virtual addresses and they start chopping accounts. So you have to be very careful. A traditional bank have different ways of compliance and risk. Fintech have a different ways. You can switch to have to pay taxes in the country. It will be short-term or long-term. And what is my plan for the future? Okay, we have residency but doesn't come to obtain residency mainly for investment and banking purposes. Country is almost effective and practical. Minimum resident that give me broker access without creating measured. I mean, I would like to answer a question, Alina, but this is beyond the webinar. It's more complex question. So, I mean, I've answered some of the question, but there's no best answer. You can choose a place and use this place to invest in other countries and make sure that you will pay short-term and long-term less taxes as possible. Alternative structure, the same thing. Alina is selling an artwork, renting a flat in Spain. Okay, so let's check the question here. Okay, we just have less than 5 minutes. It's been amazing answer all the question and go through everything. Let me go through the, I mean, one of the things I mentioned that we can have 10 minutes a free consultation with myself. This is a special or a discounting partner price through Tax Hackers. I hope the webinar today was much more, it's been enjoyable for me. I would like to make it like two-way. We can have more questions. I mean, there is a lot of questions from Alina. I'm trying to answer it as possible, but I'm happy to answer our questions. Also, if you would like, I would like to hear your feedback. You can get in touch with the Tax Hacker teams and tell them if you are happy, we can set up another seminar about more, you can say, more focused general webinars, especially about residency, because the setup of the business is good, but the residency is the much complicated question. We can go through different things and we can do it. You can say more ideas and go through state by state about the information. One last thing I would say before we end the webinar, the broker accounts is linked about the terms and conditions for each broker company. I've helped a lot of individuals set up an investment brokers accounts in the US, but you can say we've gone through 10 platforms. Only 3 of the 10 was accepting non-Americans, and only 2 of the 10 we've eliminated one because the terms and conditions are very. We have to verify the user with a special way. If they insist that you be in the US using even they insist in having US IP. If you are using any other IP, they will terminate the decision. So the broker account is it's a more one-to-one thing, and it's what you would like to do in the short term and long term. I hope I've answered more questions as possible. Thanks so much for watching. Stay global, my friends, and I promise we will have more webinars in the coming weeks. Thank you so much and have a good day. Bye-bye. Have a good day.